It's day after the budget, so let's decode the overall market reaction, all that was announced, and of course that very commendable recovery that played out in trade when it comes to the overall markets. So I guess we have all of the brokerages and their verdicts in, a lot of them talking about how it doesn't deviate too much from the interim budget. But I guess it was positive for consumption, bonds, and of course the tax changes for capital assets, according to CLSA, are a negative. And Nikunj, just want to talk about how this really should be read in. I think maybe people were going in with expectations that perhaps there would be that populist rural thrust, maybe that didn't come about, and therefore the tax changes for capital assets came in a little bit out of the blue because it's something we weren't expecting.
Aman, look, it's a new budget and it's a new budget by the same government, but clearly there is a big difference in terms of the priorities. And it was expected that the priorities need to change, some largely because of the shape of the economy, how it is evolving, B, how there are compulsions which are at play, and C, how the positioning really needs to be in terms of what really needs to be prioritized. So you may say that yesterday all the tax changes attracted all the headline, but for me this was a budget which in a sense it was a very prudent budget. It was a budget which ensured that we are in more of the same. Priorities maybe towards job creation, the priorities are towards ensuring that the rural end of the economy is taken care of, the tax regime becomes simple, but it was a budget which will ensure that the economic momentum does not reverse. It's a budget which will ensure that the financial market remains stable. And it's a budget which in a sense has also unleashed a lot of reforms which will set the real tone for the next couple of years, whether it is in the area of land or whether it is in the area of digitization, job creation or skill development. So what is the budget? Budget is historically been considered as a exercise of the government to present their finances. But this being the first budget of the Modi 3.0, it also has set the tone for simplification. It has set the tone for a lot of deep-rooted reforms. It may be, the budget may be remembered for for tax increases, but I think that in a sense is also simplification in the way how all asset classes now are just getting clubbed in a very simplified manner.
Yeah, and I think as Morgan Stanley put it, macro stability, and this is the foundation now for medium-term growth. That was how perhaps you can sum up the budget. But what's more interesting is the way the markets reacted. You did see that initial disappointment come about in the markets, and then the recovery was equally commendable. In fact, you saw a swing of 1,500 points on the Sensex on an intraday basis. So that recovery was very interesting. The fact that even, yes, you did have individual sectors or stocks that reacted to the news, but the fact that from the day's low, we did see that pullback. And Nikunj, what do you think would really explain the kind of a pullback that we witnessed, because it seems like we overcame that disappointment very quickly?
Okay, what was the disappointment? In general, the majority of the market men were not expecting, or markets were not expecting, any change in the taxation structure. But that has been changed. Nobody wants to pay extra taxes. Nobody likes to do it. So that really caused a knee-jerk reaction. But then markets also realized that, hey, what will this budget do to the economy? Fiscal deficit number, well, that's commendable that it will be below 5%. Assumptions for both, assumptions for next year on revenue, they are quite reasonable. Capital expenditure number, it's not been cut down, and a lot of focus now would be towards infra spending. So will this budget ensure that the direction of the economy remains intact? And that is what I think markets are betting on. B, the India story, and if you take out what is happening in F&O market and what is happening in small and mid-cap stocks, is centered around the SIP flows. Now, if you're a SIP investor, and if you are in for an asset allocation, and you say that, look, I'm in for a 10 to 12% kind of an equity market gain from these levels, on that, if the tax structure changes slightly, folks, we are talking about gains, tax on the gains, not absolute returns. But if you think that economy will do well, the tax changes slightly, then automatically nothing changes. So that big picture SIP driven market flows, that does not change, and that is where I think the realization kicks in. What may change, Avan, in the near term, and I'm talking about the near term, is that there are no triggers in the market. There is nothing big now really to look forward to. Two big events, the election and budget, that is over. So what will take markets higher? In the near term, of course, it could have an impact on volumes. It could have impact on return ratio. The market has seen a parabolic move. You have to realize that from June, low to where we are right now, it's always been a parabolic move. Now that parabolic move may just get curtailed. That parabolic move may just get stalled largely because of the shakeout which could happen in week 3. When a shakeout happens, the weak hands which actually fall. I always give example of, imagine a tree which has got weak fruits and ripe fruits, and when there is a little bit of shakeout, you shake the tree, the strong fruits will survive. So a shakeout could happen, and that cannot be ruled out. But when I'm surprised, Avan, is the ability of this market to shrug off bad news.
Yeah.
The way market shrugged off news or unanticipated news, not bad news, but unanticipated news. The way market shrugged off what happened on the election day, the way market recovered from the day's low. That just tells you that at a lower level, the desire to participate and the appetite to buy the fall, I think is clearly there. What may happen now, and I'm being slightly long here, is that you may see the pattern changing, which is that free flow, what you saw in PSUs, a lot of margin trades, a lot of defense railways. I think those stocks may just take a backseat.
Okay, interesting. Yes, indeed. And you can see that, that kind of recovery that really played out in the markets and the ability to shrug off the kind of bad news. Perhaps for now, one could attribute it to the mammoth liquidity flow, particularly from domestic investors. But let's delve into the individual newsmakers and the kind of movers that we witnessed, and the kind of delivery data really tells the story. Starting by talking about Titan in trade today, that was clearly a smart mover in trade, and that's largely on the back of the fact that the finance minister slashed the customs duty on gold and silver, so that came in as a huge positive for a lot of those jewelry stocks. You also had ITC that was in the spotlight. Remember, the FMCG sector as a whole really bounced yesterday. There was no tax announcement for tobacco, and that really boded well for an ITC, I think at a fresh 52-week high. There was Tata Consumer Products as well. Remember, they're looking at announcing plans as well into new product categories. And then there was Torrent Pharma that was in the spotlight as well. That was a result reaction. A pretty strong growth is what they witnessed. So, Nikunj, individual newsmakers, and that was pretty evident in the way we saw them moving in trade yesterday. Some of the top F&O gainers, the likes of Titan, ITC.
Yeah, I mean, that's result reaction. Budget mein jo milta hai, that will react immediately. So for gold, I mean, imagine import duty coming down. It is something which is a very big hurrah, because affordability suddenly increases. ITC, the favorite whipping boy, everybody likes to go short on ITC, thinking that some tax structure will come in. But ITC has this track record that even though it is the favorite stock which gets whipped before the budget, 10 out of 10 times ITC has given positive returns in last 10 years. We're looking at data in the morning. So you will actually see result reaction, you will actually see budget reaction, and I think it will be back to square one. So, yesterday we only discussed budget. Today, maybe for the first half of the day, we will only discuss budget. But, maybe tomorrow or day after, markets will just move on. Tax changes are something which you take in your stride and you always adjust. I distinctly remember when STT was introduced, everyone thought that, okay, liquidity in the market is just going to be knocked out and markets are going to be bereft of liquidity. Markets adjusted. So any incremental tax changes would be adjusted. Where you will actually see a change is that the free-flowing move which was coming, where everybody was chasing price and not value, and where everybody was chasing momentum and not earnings, that trade should come to an end or it could stall. The worst case scenario, you may see little bit price-wise correction in the market, and you may see time-wise correction in the market. The best case scenario is that market may start moving towards or may start gravitating towards sectors or themes which would be huge beneficiaries of this budget. Let's say companies which essentially are regional focused but big on infra. Companies or sectors which are big in terms of promise of where the entire government expenditure is going to move. companies which in a sense are going to be driving the new India capex. So this budget is going to be perhaps changing the market orientation, because up until now, post-election, the market orientation was a function of flows, participation, FOMO, and left out syndrome. So now that Johnny come lately crowd who was desperate to come in, they would say, okay.
It's like what Hiren Ved was telling us last evening, right? When he was reminiscing about Rakesh Jhunjhunwala, कि अगर पैसे कमाते हो तो tax देना ही पड़ेगा.
Yeah, but Aisha, you have to realize that what is the proposition for Indian equities? Has this budget done anything to change the medium-term economic picture? In fact, no. If I have to really, I was just thinking about it that, okay, imagine if I have to make a headline. I would make this headline that this budget is for Mr. Bond, because this budget in a sense has ensured that the bond market remains stable.
If you like this video, then like, share and subscribe to ET Now.